More on the short selling ban in just a moment, but I just want to mention that 4 consecutive trading sessions of moves of more than 400 points with the Dow Jones Industrial Average. And today, the Dow gained nearly 4%. So what are some of the key technical levels that we need to pay attention to? We've got Rick Bensignor. He is a managing director at Dahlman Rose, an expert when it comes to the charts, the protractors, the algorithms.
Don't forget investor behavior.
Investor behavior, animal spirits,
everything,
right? Because it's just an expression of what. But just because we've got this news right now, France, Belgium, Italy, and Spain, no more short selling.
Right.
Does this matter?
I think the market kind of knew it was coming. Once it became a potential rumor earlier, I think the market already acted on it. If anything, Julie's saying that the market was coming off a little bit. It was a minor sell-off. Futures are mostly back to unchanged. It's not big news.
Okay.
It's not what's going to help stop a market from going down. If the market stops going down, there are going to be other factors. It's not because they stop short selling.
Why do I sense that underlying your slight bit of optimism, you're still concerned that the market could fall?
Well, we've bounced now for a couple of days, let's say using the S&P, which is the institutional benchmark. We don't usually look at the Dow, so we're talking the S&P. We've held 1,100, let's say 1,125 for several days now.
Intraday, right?
Intraday and on closing basis. To us, 1,075 to 1,100 is critical support for the medium term for the market. So as much as the market's come off, and it was almost 20% going into today's decline, I think we were at 18.5%, something like that. This is the level to us that we think really needs to hold to keep the general bullish structure intact. Psychologically, you've already changed the game. The loss of confidence, not only in maybe not so much the system, but in, shall we say, Washington and policymakers and the people behind the government. That's really where I think a lot of investors are reacting negatively to in the fact that
so
they've
in other words,
selling.
they see what's going on in the political world and they take it out in the financial world.
Well, they take it out in the financial. Look what's happened in the. Let's go back 3 weeks. Let's say Congress finally decides to fix and create the debt ceiling extension. European government supposedly fixed
Greece. They get the European financial stability.
And what happens to the markets? The markets fall apart when everything supposedly was fixed to make things better. Investors generally have some smarts to them. Not everyone, but a lot of them do. And the fact that the market sold off like this is really a vote of no confidence, I think, in governments and policymakers who are, I think, so often more out for their own good than for the people they're supposed to represent. In my opinion, if you got rid of politicians, the world would be a lot better place.
All right. So maybe even let us put that aside for just a moment. But I mean, would it be logical for people who are watching, the smart investors, to say, these guys don't know anything anyway, because if you have a 400-point move to the upside and a 400-point move to the downside within 48 hours, how is it possible that Citigroup is really 9% better than it was yesterday? What's happened to the world?
Well,
nothing?
You can look at it that Bank of America is 50% of where it was, a year ago, and probably only 30% of where it was 2 weeks ago. I'm sorry, 70% of where.
All right, so we get to sort of say none of it makes sense, but we've got to make some sense out of it.
Well, there's two sides of this. There's the market fundamentals. There's also the game of the market. Right, so the S&P traded between 1250 and 1350 for the bulk of the year until 3 weeks ago. And I'd say probably every time I was on your show this entire year, you've never seen me come on and be really the bull that so many other people have sat here and been. Because we knew there were issues, and the fact that the market was up, people are saying stocks are cheap. Stocks being cheap is not a reason that you create bull markets. It could lessen a decline and say stocks are cheap, maybe we'll bid. But in and of itself, the valuation of the market is not going to create a bull market.
We only got two seconds here. You still worried?
I'm still worried. I'd be a seller. If we got back to 12 and a quarter, 12.50, where we broke down from, I'd lay out my stock.
All right, we got to leave it there. As always, a pleasure. Rick Bensignor coming to us from Dahlman Rose.